Brought to you by runtogold.com, the premier source for monetary science applied to geopolitical, international, and economic, financial news and events. Hi all, welcome back to episode 38 of the runtogold.com podcast. This is an interview I had on Contrary Investor Cafe, so enjoy.
Jim Willie and Friends is a production of Radio CICN and is produced for informational and educational purposes only. Please remember that all content is solely and completely the viewpoint of Jim Willie and guest commentators and does not necessarily reflect those of the staff, advertisers, affiliates, or other guests of Radio CICN or ContraInvestorsCafe.com.
Hello, everyone, and welcome back to Jim Willie and Friends. This week, we're here with Trace Meyer. Hi, Trace.
Hi, how you doing?
I'm doing well. How are you?
I'm doing well, too. Finished a little bit of traveling, so it's good to be somewhat stationary for the moment.
Yes, I can understand that. Well, I'm really glad you're here today because one of the things I wanted to talk to you was really the topic of one of your latest articles, and that was the difference between physical gold and paper gold and the different investing. I know that with you being a lawyer, you probably have a real insight as to, some of the rules and the backgrounds of some of these and what makes them, either better investments or possibly really bad investments.
Oh, yes. It's, being trained in the law, it's probably a little too much faith in these paper instruments or lack of faith therein, but definitely the legal language that's used in the construction of the documents that govern the gold holdings plays a large role in who has rights to it, who owns it, things like that. And so these property rights that are so important, they're governed in the user agreements, and when you read some of these user agreements or prospectuses, there are quite a bit of holes there, so it could be very dangerous to someone's financial health. And, of course, it doesn't really matter until it's the only thing that matters.
Right. You want to give us a little bit of rundown on what you found out?
Well, and as I'm sure most people here have either heard about or they've read my article on the ETF, it got a lot of attention. Hundreds of thousands of people read it. It's really kind of what stirred up all of this controversy over the ETFs. And what I did is I went line by line through the GLD prospectus and just pulled out some of the critical issues that if I were to be investing in that particular instrument, I would take issue with. For example, on page 11, it states, quote, "Neither the trustee nor the custodian independently confirms the fineness of the gold allocated to the trust." So, there we have it right in the prospectus. They don't confirm whether they have any bars of anything, and if they do have bars, they don't confirm whether those bars are gold or lead or zinc. So, it's a risk factor right there, and yet there are investors who have put approximately $18 billion worth of capital into the GLD ETF, thinking that some of them may think that they have gold, some of them may realize that there are these defections, there are these defects in the prospectus as far as whether it is gold, but that's an important thing when you read the prospectuses and whatnot, or the user agreements. You want to know that what you own is what you think you own, and not to be under any real illusions about what it is that you may or may not own. An interesting thing happened with that particular article. I got a comment from one of the readers on my site, and he said, "Well, it's absolutely ridiculous to say that the gold hasn't been audited," because I had alluded to that in the first article. And I usually, I think one of the reasons I don't get many attacks on my articles is because I intentionally craft them like a barbed arrow, that if you go to attack my articles, it's like ripping out the barbed arrowhead, and so it actually causes even more damage. And so like usual, I crafted my GLD article like this, and the person fell for the bait, and they raised this issue about the auditing. And of course, I was already a step ahead of him, and had my source down that I was going to use. And so on page 11, it says, of the prospectus, it says, in addition, the ability of the trustee to monitor the performance of the custodian may be limited because under the custody agreement, the trustee has only limited right to visit the premises of the custodian for the purpose of examining the trust gold. So it's very difficult to audit the gold, okay? And so that was my bait that I gave to somebody, and somebody commented, but I'm not sure how you get to, quote, an audit of the actual physical gold is precluded from, quote, the trustee has only limited rights to visit the premises. He said limited rights is not no rights. And so I of course, then hit him with the real rule, because in the 10K, which is filed on a quarterly basis with the SEC, let me see if I can get the exact quote here. Okay, here it is. This is on page 26 and page 18 of the 10K. It says, quote, gold held by the custodian's currently selected sub-custodians and by sub-custodians of sub-custodians may be held in vaults located in England or in other locations. And, quote, in addition, the trustee has no right to visit the premises of any sub-custodian for the purpose of examining the trust gold, or any records maintained by the sub-custodian, and no sub-custodian is obligated to cooperate in any review the trustee may wish to conduct of the facilities, procedures, records, or creditworthiness of the sub-custodian.
Wow.
So there we have it. You know, I lay the bait in the original article, and someone fell for it, and so then it's, you know, they started messing with the arrow and decided they'd pull it out, and when they did, it ripped out this huge gaping hole of flesh that reveals in the 10K that there is no right of the trustee to audit the physical gold bullion in the GLD ETF. There's no physical right to audit it in the legal document. And so, I mean, it's almost unbelievable, isn't it? There's supposedly $18 billion of gold in some vault somewhere, but the people who think they own that gold have absolutely no right to visit the premises and review or examine that gold.
You ever heard the old saying that some people have more money than sense?
Yeah, well, anyone like John Paulson, the big hedge fund manager, I think he owns 8.7% of GLD, like $3 billion worth. Well, yeah, he got more money than sense if he's got $3 billion worth of this paper that is gold, and he's not even allowed to physically audit that $3 billion of physical gold. I mean, I would think that might even be gross negligence on his part as a money manager. But
you know, the sad thing is that I suspect that there are a lot of people who have, you know, the best of intentions and are really trying to do the right thing with their money that just don't have a clue because they don't have the, you know, some people are just so intimidated on reading all of the legalese that's put into these agreements. So they just sign on blind faith. Yeah,
I get emails all the time. It's like, oh, can you read CEF, or can you read GTU, or what about the Perth Mint, or, you know, and I've only really intensely examined the GLD ETF and gold money, you know, as far as reading user agreements, because, like you said, it's not any fun to wade through. I think the GLD prospectus is like 40-plus pages of this legalese. I mean, it's no fun to wade through that, and it's crafted. You know, I went to school with all these people that crafted. I took securities regulation. It's no fun to draft these things. And the people who do draft these things, they get paid hundreds of dollars an hour to put in sneaky little clauses like this. I mean, that's what they're getting paid to put in. So, and it takes an equally, you know, in some cases it takes an equally skilled mind to catch some of these sneaky clauses.
thinking that probably their worst nightmare is someone like you who has the same training that can ferret out the sneaky little clauses and reveal them to the people who need to know.
Well, yeah, I'm sure that I upset somebody by just by trying to pull back the curtain a little bit. But it is what it is, and if I don't do it, someone else is going to do it. So
might as well be you.
Yeah, might as well be me. And
one other thing I wanted to ask you about is in your article you were talking about the disparity between the recorded amount of paper gold and the actual physical gold there is known to be above ground and not still waiting to be mined at being 140 to 1.
Oh yeah, it's probably at least that. As far as there being physical ounces of gold and people who have ownership or claim on that physical ounce of gold is probably at least 140 to 1. GATA actually asked the most. I quoted GATA's article here because Chris and Bill, they usually hit right on the issue, and this is what they said in their article. Just as there may be plenty of gold left at Fort Knox, but those are not the most compelling questions. No, the most compelling questions are who really owns that gold and how many people have claims to it. Because, to stop a gold run or to stop a bank run, well, you have to have some gold there. And so on Monday, you trot in the British finance minister, and on Tuesday, you trot in the German finance minister, and maybe on Wednesday, you trot in the Swedish or the Austrian. But you trot them all in and say, oh, see, we've got the gold, nothing to worry about. and so that's really how this game is played. And what's happening now is people are getting a little suspicious, and they're wanting to reduce their risk, because that's one of the reasons you buy gold is to reduce your risk. There's not really any other reason to own it. You want to own something that's risk-free. And so you want to reduce these layers of risk between you and your assets, whether it's the legal documents, like not being able to audit your physical gold or not being able to take possession of it or whatever it may be. You just want to reduce these layers of risk and go with institutions that are trustworthy, or at least their documents are trustworthy, and you trust that they'll perform on those contracts. And it's getting a little shaky because the big vaults out of London, the Arabs are starting to truck their gold off. Jim Willey, he was talking about this, and people are just saying, well, give me my gold right now, and it's getting harder and harder to come up with the physical metal, whether it's gold or silver, because it looks like silver has even more, has an even higher ratio than the 140 to 1. So it's,
all of this, when it comes down, should have a profound effect on the prices of these metals.
Well, not necessarily, because maybe the ratio is 50 paper ounces to 1 ounce of gold, and so a bunch of capital moves into the gold sector, like the $3 billion from John Paulson. But as long as they can satiate that demand with more paper, the price could even go down, because say people want to buy 20 ounces worth of gold, if they sell 25 ounces of paper gold, well, that's going to drive the price down because it's 5 more ounces than market demand. So really what's happened is with this gold price suppression scheme carried out by the Department of Defense and the U.S. government with a coordinated plan since the 1960s to manipulate the exchange rates, to keep the dollar strong, they've been able to keep playing it's a Ponzi scam or a shell game with just issuing more and more paper, and so people who are satisfied with paper instead of physical gold, they'll allocate their capital to that, which keeps the price from rising, or in some cases might keep it lower than it might otherwise be.
Okay, I guess I understood it wrong then.
Well, when you own a lot of something, why run a cartel to keep the price down? Central banks own a lot of this physical gold, or at least they purport to own a lot of the physical gold. But if you own a lot of it, why run a cartel to keep its price down? Well, the reason is because their power and ability to issue fiat currency, their paper franchises, that's infinitely more valuable than the price of a portfolio asset, which is gold. But see, gold's a currency. It's not a portfolio asset, but everybody views it as a portfolio asset. And because we do that, we're content with accepting these paper promises and things like that. But all that's done is it's kept the price artificially suppressed because they're able to satiate demand for the physical. See, people are like, oh, I want gold, but instead of demanding the physical metal, they will accept some type of paper promise. Mm-hmm. And so there's really, if we look at gold demand, there's physical gold and there's paper gold, but there's a lot of the demand for gold is being met with paper gold, and people just need to change their attitude and be like, oh, well, I just want physical gold in my hand right now. That's what should happen. And of course, as there's more and more risk and more fraud and more things like Bernie Madoff, it'll cause people to move into the physical gold, like the Royal Canadian Mint. They've stopped all employee bonuses, and they've set in an army of external auditors because they think that there's $20 million of physical gold that's unaccounted for. Whoa. Or another example, here, this is great. I put this in my ETF article because Morgan Stanley and Company is one of the custodians for the quote unquote gold in the GOD. And this is what I wrote in my article. I said, for example, in June of 2007, Morgan Stanley and Company settled a class action lawsuit for $4.4 million where the complaint alleged, quote, that Morgan Stanley told clients it was selling them precious metals that they would own in full and that the company would store. But Morgan Stanley either made no investments specifically on behalf of those clients, or it made entirely different investments of lesser value and security. So here's one of the custodians for the GLD ETF. They had their high net worth clients that wanted to buy physical gold, and they went and told them, okay, we're going to buy physical gold for you, and we're going to store it, and then they never bought a single ounce of gold. They still charged some storage fees. And now the efficacy of this complaint, we don't know whether Morgan Stanley is actually culpable in this because the case was settled out of court. But to initiate this type of litigation against the company, that's more than just a Better Business Bureau complaint. And Morgan Stanley did settle for $4.4 million. But it just goes to show you that we have some people with more money than sense, that they try and make multi-million dollars worth of investments in physical metal with these large Wall Street investment firms like Morgan Stanley, and yet Morgan Stanley tells them, oh, yeah, we bought metal for you, and we're storing it, and they charge them storage fees, but they never bought any physical metal. How many people out there have investments in gold or silver that don't actually have the physical metal behind them? And they might be lied to. Let's assume, for the sake of argument, that Morgan Stanley really did do everything that they said in the complaint. Well, that would be intentional fraud, defrauding and embezzlement of their customers. How many people out there are being defrauded or embezzled from the person who's storing their gold or silver? We don't know, but that contributes to this approximate 140 ounces of paper for every 1 ounce of physical. We don't know exactly how many ounces of paper gold have been sold for every ounce of physical because even though gold is such a transparent asset, it's either in your hand or not, the gold market's very shady. You got these unsavory characters lurking in the shadows saying, oh, yeah, I'll buy some physical gold for you, and I'll store it, and won't charge you much for the premiums, and yet they never actually go buy any physical metal. And
I find it amazing that you get a company that settled the claim on that, like Morgan Stanley, but there weren't any charges filed. You send people to jail for less.
Oh yeah. If they're smoking marijuana or they steal a car, they steal a $5,000 car, they're going to go to jail for grand theft auto. But if they embezzle $4.4 million by buying people paper gold instead of real gold, they settle it out of court and there are no charges filed. Yeah, it's kind of ridiculous. But who's really causing more harm here? But it's not just multi-million-dollar deals, small deals of maybe, I want $1 or $2 million of gold. I was actually talking with James Turk, because I'm friends with James Turk, and we have lunch and dinner every now and then. And I was talking to him, and he was telling me a story about when they first started up gold money, and they're going around to the bullion banks, kind of telling them, we want to buy LBMA bars, because the London Bullion Market Association bars, that's the gold standard. It's the refiners. They bring them in. Those bars are physical gold. They have a chain of integrity, chain of custody. So he's going to the bullion bank saying, I want to buy physical gold, and they'll quote him a couple different prices. They'd quote him a price if he had the physical gold like in their vault in allocated storage or in their vault in unallocated storage. He's like, well, no, we want to actually take possession of our physical bars. And he said that their reaction was, well, nobody does that. I mean, why would you want to do that? And he couldn't find anybody to sell him gold bars that he could truck off. But eventually he found someone that would sell him gold bars that he could truck off. And now Gold Money has, I think it's over $600 million worth of LBMA bars in their vault. And they publish a list every quarter where it shows the serial numbers of the bars, and it shows what pallet they're on, and there's real extensive checks and balances, and they complete a SAS 70 Type 2 audit, which is one of the most strenuous audits that auditors do. And so it's a lot cleaner and a lot more transparent, the system is. And so, when the system is clean and transparent and there are multiple people with different responsibilities, it decreases the risk of fraud because you have to have collusion between multiple parties. And, Deloitte and Touche isn't necessarily going to collude with Andium Trust and Viamat to, steal the gold.
Right.
But, it could happen. It could happen. I'm not saying it won't happen. I'm just saying that the probability is a lot smaller than if you have custodians of subcustodians who have, and you have no right to audit the physical gold. And I mean, what type of mess is that? I mean, of course the risk of fraud increases when there's no right to audit the physical gold. Of course the risk of fraud increases because the person knows that that if they do engage in a fraud and they take possession of the gold and run out the vault with it, that nobody's going to be checking on it for a long time because they have no right to check on it.
You have to think when you ask for, a securities lawyer, like you said, to write a prospectus with the sneaky little loopholes in it, that the intention for fraud was premeditated.
Well, it might look that way, and the circumstantial evidence might point to that. I mean, I don't want to necessarily accuse people of doing something wrong that they haven't done, or at least that we can't prove.
But it looks that way. You're right. You can't prove it. But anyone with half a thinking brain would suspect it.
Yeah, I mean, anyone would have a brain. They'd be like, man, this looks like a red flag. And, that's kind of me. I've been waving a red flag the whole time saying, hold up. You might not want to own this thing because there's some potentially systemic problems with it. Whether those problems will materialize or not, well, that remains to be seen. But at the end of the day, I don't want to be that guy at the end of the line who doesn't have any gold. I don't want to be that guy. And so you can be that guy, or someone listening to this, they can be that guy, but I don't want to be that guy. I want to be the guy with the gold in my hand because I want to be able to buy breakfast. I don't want to be cooking breakfast for someone else.
Right.
So I don't want to be that guy, and at the end of the bank run, or at the end of the line at the bank run or the gold run, or whatever it is. And so I try to be very safe and conservative with my investments and what I own, and I like to know what I own. And if I don't understand it or I don't like it, then I'm not going to buy a particular asset, whether it's a bank stock or a junior mining company or a GLD ETF. I need to understand what I own before I'm going to buy it.
Right. At the risk of us sounding like we're a commercial for gold money, which I wouldn't mind being, because James Turk is a friend of us as well. But it seems to me that gold money and places like gold money would really be the only logical option if you want to own, say, more gold than you could conceivably store in your own house.
Well, yeah, we're looking at a gun safe right now. It's going to cost $900 to ship the gun safe. So, we could fit a lot of gold in that thing. But, we don't necessarily want to have a bunch of gold in one particular physical location. We might want it in London and some in Zurich, which gold money operates. And, gold money is not necessarily the only provider. It's just the only one I've intensely researched. And, if anyone wants to pay a bunch of money, I'll go research something else. But until then, I have other more important things to do with my time. But there do appear to be other alternatives out there that are reputable. I haven't researched them myself, but there's others like Perth Mint or Bullion Vault. At least all the initial research I've done on Bullion Vault, they seem to be a pretty good operation. I did have a friend. He said that based on their financial statements that the owner had to lend the company a bunch of money, but that wouldn't impact your ownership of the gold, from what I understand. It would just impact the continuity of the ordinary business operations if they had to find some new management. But that loan wouldn't jeopardize your ownership of the bullion. But at the end of the day, we're all adults. We need to read our own documents, and we need to make our own decisions about what type of risk we're willing to incur, which is why I titled my article what I did. I called it, "What is your gold standard?" Mm-hmm. For some person, they might be perfectly happy with the GLD ETF. But my personal gold standard is the corporate governance that gold money has, and the SAS 70 audit. That's my gold standard in conjunction with physical bullion in my own possession. That's my gold standard. I either want the coin in my hand, or if I do have a third-party storage service, and I think that they do play a legitimate role in an investor's portfolio, then I'll go with something like gold money, where I have a right to audit the gold, where the gold's insured, where it's LBMA with a chain of integrity and a chain of custody, and so on. Just because I don't know, you could call me Chicken Little, because I think James Turk, he's chicken big, so. So it's, everyone has to just determine how much risk they are willing to take themselves with whichever part of the capital that they're allocating. Some of my capital that I allocate, I'm willing to take more risk with. And so with that capital, I might be willing to buy the GLD or SLV ETFs because I'm just trading them short-term or something and would rather use them than a futures contract or whatnot. So, it really just depends on one's individual preference, in my opinion.
Well, and I think that makes sense. You're right. Everyone needs to do their own due diligence and take time to read or have someone read the agreements before they, place a significant amount of money in any investment.
And if people think that they're going to, you buy gold because it's an insurance for when everything else fails. So, if there is a problem with the GLT ETF, there will be no bailout. Because it's going to be complete pandemonium. So, there's not going to be a bailout if there's a problem with the GLD ETF.
Nobody bailed out the Ponzi
government
scheme.
Oh,
well,
Bernie?
yeah, government motors. No, I was thinking about the Madoff. Nobody bailed out Madoff's victims.
Oh yeah, and it's horrible. Like I was reading about actually one of the kids' parents down in Southern California, where I'm at. They had $20 million with them. he can't go to law school anymore because he can't get tuition money.
Oh.
So it's most unfortunate. But at the same time, we're seeing there are a lot of people who thought they were part of the club, and they're realizing that they aren't part of the club. You know, they thought they were part of the political elite or part of the business elite, and now they're learning that, oh no, you're not part of the club, and they've lost their $20 million or however many millions of dollars that they have because they trusted a particular character or institution or institutions that they probably shouldn't have.
Right. Well, I'm really glad that we had this opportunity to talk today, and I'm especially glad that we have someone like you on this team that we've arranged, because you bring a unique perspective being trained in the law. A lot of people have a lot of experience in these things, but they don't have the ability to dissect, like you said in your article, scalpel, please, you know, to dissect the carcass, so to speak, of these things and you know, come up with the real truth.
Yeah, and that section was actually directed at some of the arguments that John Nadler had made. And like I like John, but at the end of the day, like I argue ideas, I argue arguments and assertions. So I don't, you know, it's nothing personal towards John and his arguments that he made about the Royal Canadian Mint or about these issues with physical gold versus paper gold. You know, I don't really have any beef with John. You know, if Big Bird made the same argument, I'd attack it the same way. So it's nothing about John. But you know, it's all about the argument with me. It's all about the word. And I try to, you know, take the individual or the person out of it and just go based on the facts and based on the words that are written there, which is another skill you kind of learn in law school. You know, you work on the words and the facts as they're presented, and you try to take the emotion out of it, because there are a lot of people who get all really emotional about things, especially when it comes to money, and I think it's important to keep a level head.
Well, and you can't think clearly if you're getting all emotional, and you can't analyze if you're not thinking clearly.
Right, exactly, and then you make poor choices,
right?
Because you're not balanced.
So to wrap this up, instead of making poor choices, we want to emphasize that people really need to make good choices with their investments. So from your recommendation, obviously this is not, you're not telling everybody what to do with their money, but what's your best analysis on what folks should do when investing in gold?
Well, make sure that you know what you own. If you're going to buy physical coins, go with a real reputable company. You can usually find that out by looking at Better Business Bureau ratings. For example, last night we had some friends over for dinner, and they were asking the same question: "Oh, how do I buy some gold?" Because they had tried to buy some gold. I guess they tried to buy some from Monex, and Monex has an F rating with the Better Business Bureau, and they told me that they had a horrible experience with Monex. And so I was like, well, I'd use American Precious Metals Exchange. They have an A+ with the Better Business Bureau. Or Mike Maloney, he has a company, Gold Silver, goldsilver.com, where you can buy physical coins. I think he has a B+ or B- or some, not an A rating with the Better Business Bureau. But I know Mike, and I've had good dealings with him. And so you really have to find a good, reputable source that you're willing to do business with. And then if you're going to buy any of the digital gold or the paper gold where it's stored by someone else, I like a lot of these people, Peter Schiff or Mike Maloney, a lot of them are very leery of any of the institutions except for gold money. In fact, Mike Shedlock and Doug Casey, Mike Maloney, Peter Schiff, all of them have publicly recommended gold money. But from what I understand, they have not recommended any other digital gold type institutions. So I'm going to stick with the herd on that one and be like, well, if you're going to go online, go look there. I actually have all the relevant documents that someone would need for due diligence on my site on runtogold.com. I have a little section, and you can go, and it has all the due diligence for gold money. I have their certificates of incorporation. I have links to the relevant law, the relevant Jersey law that they're governed under, so people can go there and do all their own due diligence, which I'd highly recommend people do before they send any money there, because if gold money has a problem, don't come yell at me, because you need to do your own reading and stuff like that. But I compile it all, so it saves people a lot of time when they do go and do their own due diligence. Because I've had I've had readers that have wired millions of dollars over to gold money, multiple readers. So it's don't get upset at me. I try my best, but at the end of the day, you need to step up and take personal responsibility for your choices. And, these people, I guess they would rather have large amounts of money there than in their own personal safe or whatever. And definitely don't put anything in a safety deposit box, because it might end up on eBay. That's a whole other issue. But, yeah, you go to my site. I've got a special video right now about how the states are seizing safety deposit boxes as unclaimed property, so that they can sell all of it at auction and put it into the general fund. So don't if you buy a physical gold coin, don't put it in a safety deposit box. That's just a bad idea.
Yet another bad idea.
I got a link to the Pennsylvania State Treasury's eBay page, and they've got like 8,000 ratings. They've been selling everybody's stuff. Grandma's pearls. It's horrible. Yeah, so there's a little friendly tip. If you buy your physical coins, don't go put it in a safety deposit box.
Well, on that note, I think we'll wrap it up. And I know you mentioned your site, but why don't you do that again? Let folks know where they can, find out more of what you have to say.
Oh, okay. My site is runtogold.com. You run to the gold for safety. And then I also have another smaller site that I've just started with a friend of mine from law school. He does litigation and privacy law, and that website is called howtovanish.com. And we talk about financial privacy and personal privacy and how to protect them and things like that. So it's a kind of a parallel. It's a lot of fun. I think people enjoy it. So run to gold and howtovanish.com are a couple sites.
All right, and don't forget to mention your book.
Oh yeah, I have a book called The Great Credit Contraction, and you can find a link for that on Run to Gold, and it gives an overview and a general roadmap of what's happening right now, the economic laws that are at work, and what people can do to protect and preserve their capital. Which I'd highly recommend people get that. I've had a lot of good testimonials from people, and it's written pretty simple, but it's very dense. For example, one of my readers, he's the director of cardiology at Harvard, and he loved the book, And so I've had a lot of people like that, Harvard MBAs that are running hedge funds, whatever. They said, "Wow, this is so profound, yet it's so simple and easy to understand." So it's a good book for getting a good foundation for what's going on in the current environment, and where it's really forward-looking, like the next 5, 10, 20 years. So I think it's important for people to understand what economic laws are operating and why and what to expect. Otherwise, they might find themselves making bad choices because they're not able to analyze the current situation.
All right. Well, I know you've got a lunch engagement that you want to rush off to, so we're going to let you go. We look forward to speaking with you again next month.
Yep, sounds great. Okay.
All right. You take care, Trace.
Well, there you go. That's episode 38 of the RunToGold.com podcast. Thanks for listening. You've been listening to the RunToGold.com podcast, the premier source for applied monetary science on the web.